I guess I can go first, since
Sure.
Sherry is not seem to be replying.
Sure, sounds good, Wasi. Thanks.
Okay, just give me one moment, please. Okay.
Sure.
So the companies that I chose the corporations, I should say, I chose to invest in for this project were, as you can see, Activision Blizzard, Sony Group Corporation, Apple, and the RBC, Royal Bank of Canada. As some of you might be aware, these are some big name companies, but even so, despite their stocks having already high margin, these companies continue to grow at a steady pace. So what that would mean from a business standpoint, investing standpoint, is that even if you were to invest and buy a less amount of stocks as compared to a company that might not be do financially well at this time, but what these companies offer is, with a high amount of value to each stock, the price continues to raise slowly. So the earlier you invest in these companies, you're almost guaranteed, unless some unforeseen circumstances were to take place, that these companies would generate you a steady profit over the long run. And I'll start with Activision Blizzard first. Just recently, I did some research, and they released a new title for their company. They're a video game production company. So they released a new title, and that has resulted in the sales going up about 150% just in the first few weeks of the game releasing, which I believe was November 7th. So just in the past 2 weeks, not November 7th, my bad. I meant October 27th. And just in the last 2 weeks, the company sales have gone up drastically because of that. And I believe if you were to invest now, the profit of the investment would only go up, at least for the next foreseeable year, because the hype that is generated for a new product being released into the market is generally greater than what is experienced long term. So what you can see by that is, whenever a company launches a new product, the profits tend to skyrocket for a small amount of time before they take a leap downwards and generally go back to an average medium. So if we were to invest in a company that has their stocks at that average medium, when the company skyrockets, all the profit that the company generates will end up going into the stock price rising as a result of that, which is why one of the reasons I picked Activision Blizzard was for this reason.
Well, that's great. Good analysis, Wasit. That's great. Yeah, the analysis was great, and I'm an investor in Microsoft, and they're currently in the process of trying to buy Activision Blizzard. And a lot of the reason why I wanted to purchase Microsoft is because of the benefits of having Activision Blizzard through how Microsoft owns Xbox, and they'll have a lot more game production and a lot more graphics that they can produce with Activision. So that's a great analysis also for Microsoft too, because if Microsoft owns Activision Blizzard, they'll benefit from all those.
Yes, that is correct. As it stands now, Microsoft's stock value should not be as high as you would normally imagine. And if you were to invest in Microsoft right now at this moment, if the deal were to go through with Microsoft, the Microsoft stocks would see a really high increase, as people who were planning on investing in Activision would instead now invest in Microsoft, because that is a leading company that has overtaken Activision Blizzard as a whole.
Excellent. Oh, that's great. Well, see, perfect. Do you want to talk about the Sony and Apple and Royal Bank of Canada?
I mean, if you'll allow me, for Sony, it is a kind of a direct competitor to Microsoft in terms of producing gaming consoles. I'm a pretty big gamer myself, so I tend to lean into subjects that I'm particularly interested in, because I tend to know more about something that I'm interested in as compared to something I may have no knowledge about. which is why my first choices were gaming companies that have been seeing success for the last decade or so. And for Sony in particular, lately we have been seeing a trend of Sony signing exclusive deals with gaming development companies like From Software, and recently we have also seen them cooperating with new games like HoYoverse. These companies have been known to generate huge sales in the recent titles that they've produced, and with Sony signing a exclusive deal with them, that means those products from those companies can only exist on the Sony's platform, which gives Sony a huge edge. And whenever a deal is being signed by Sony to acquire an exclusive product, the stock market usually favors Sony by making the stock prices go up, since the revenue seems a great increase, because exclusive products are something that a lot of consumers sought after, because especially if it's a product of high quality, because if there's two products that are being put side to side, if one in an A to B comparison, if product A has a clear distinct advantage of being an exclusive product, that automatically gives it a huge advantage over the B product. And with Sony making exclusive deals regularly on a monthly basis, I believe that Sony's market will continue to see a rapid increase, especially with their newest launch of the PS Plus program. And moving on from that, I'll touch quickly bases on Apple and RBC. So they're completely different markets of operation. I do think they share a bit of similarities. Apple is a mobile company, as most people are aware. And one thing we do know from Apple is that they release a phone every year. And similar to the concepts I talked about before, whenever their company is on the verge of releasing a new product, due to the production cost, the value of the stock tends to go lower, as the company may be anticipating an increase in revenue. So if a person were to invest in a company just before it releases a large product, that they are almost guaranteed to sell well, as Apple has a brand distinction, we can almost guarantee ourselves. Well, I won't say there's a guarantee in everything, because there's always unexpected things that can occur, but we can maximize our chances of earning a profit if we were to invest in a company that is almost guaranteed to sell well on a product that they've been working on. As for RBC, I'll quickly touch on, since my presentation is going for too long. Royal Bank of Canada is mostly known for giving out loans and handling people's money. And one thing that we as a consumer can do, and as an investor, I should say, is by investing in a company that deals with managing money, Royal Bank of Canada can lend out the money that we invest in it to other consumers and charge them a high interest rate, from which they're almost guaranteed to make their money back, because if they're giving out a loan, the consumer is, or the person who has taken the loan, is guaranteed to give that money back. Otherwise, they will have to file for bankruptcy. So as a return, you can almost be sure that a company like, or an institution like Royal Bank of Canada would not see going out of business with the way they're handling their procedures. Apologies for going on for so long. Thank you for having me, and I appreciate the chance to be able to talk here.
That was great, Wasi. Thanks for all that. That was great analysis, and yeah, like great analysis for that. Excellent ideas, and everybody for the 5% bonus assignment. Those are some ideas of stocks you could own, and also with if you have your own brokerage account, you could potentially purchase these companies as well. I know that, so I'll show this article quick. So the stock market is doing better now because their inflation is less than they expect now, and it's starting to, inflation's lower than they are expecting. So that's beneficial for the market, and the market's been doing best in the last 12 months right now. And I do anticipate it will still keep going better if inflation doesn't go up more. So I think inflation where it is now and it going down, that will benefit the market. So it's a good time to start investing. If your parents have an investment account, if you have an investment account, if you could potentially like if you can start your own investment fund as a business, maybe find investors, you could do that. That's a potential idea. So yeah, it's a good time to invest. And I'll ask Christopher, do you want to try? Do you want to talk about your companies and why they're good companies?
Can you hear me?
Yes.
Yeah. Well, first of all, I'd like to ask a question regarding the Microsoft. So if
Yes.
I remember correctly, because I think I've read it somewhere, like typically when a company like acquires another company, the acquiring company's stock tend to slide, and like they move up and down in opposite directions. The target company stock of the target company tend to go up, while the the acquiring company tends to go down. So I couldn't really explain like exactly why. I think because they're paying a premium to um something like that. But yeah, yeah.
You're right. You're right. That is correct for the short run. So when they do purchase it, like initially when they purchase it, so when they purchase it initially, the price of the company you buy goes up, but the price of the company that buys the company goes down. But in the long run, the company that bought the other company benefits a lot. So it's more of a long run play. Short run, they lose a bit of money because it's expensive, but long run, if it's a good business like Activision is, Microsoft's going to benefit because Microsoft owns Xbox, and they'll have a whole bunch of games that Activision builds, and then they can sell them. So long run, it'll be beneficial, but as you say, you're right about the short run. Short run, Microsoft will lose a bit of money in the short run, but as the long run goes, they'll be fine. They'll benefit.
Okay. Yeah. I'm not sure if I'm ready to present my stock choice.
Oh,
So,
that's okay. That's okay. If you feel open to presenting later in the class, feel free. That's perfectly fine. Just let me know if you do want to present later. But yeah, that was a good. You're right about the analysis there. So like short run, the company loses money from buying the other company, but long run they benefit if it's a good company they bought. Yeah. So Ellen, do you want to explain about these companies and why they're good purchases?
Sorry, Prof, but I am not ready to.
Oh, that's okay. Yeah. Like I said to Christopher, if you feel ready later in the class, feel free to talk about the companies, but thanks for writing them down. Those are good companies. Christopher and Ellen have very good companies listed, and they definitely fit the focus in Charlie Munger's book that I posted. A lot of these companies like the cereal, General Mills, General Electric, Royal Bank of Canada, Google, all of them fit. Tesla, all of them fit the principles in Charlie Munger's book. That's great. Nicole, do you want to talk about your companies, or do you want to wait until later?
I can talk about it a little bit if you don't mind.
Oh, sure, sounds good.
Actually, I've chosen those companies because they had like an increase in their stock values according to Google Finance, but also because I don't know if everybody's aware, but Facebook, those huge technology companies they especially Facebook, they let go over 11,000 employees, and I think it was yesterday. So, but Amazon, for example, it's not the company is not going towards this direction, which is I believe it's good for in a financial matter for its stocks. And DoorDash, it had also an increase in its stocks value, but it's a company that it has the feeling of a startup. And I think this this profile is something that triggers me, and personally, it's something that I'm interested to. So yeah, so that's why I've chosen those companies, and I believe they have great potential as I mean, in the stocks as in general, as an overview.
Excellent. No, that's great, Nicole. That's great. Yeah. Netflix and Amazon at the prices right now, they're very inexpensive, and they may be good buys because they're cheaper than they were a year ago. So
Yeah.
yeah, so them being cheap, that's a good aspect of buying. So when they get back up to the value that they should be, you'll make a lot of money. So those are good. That's a good analysis, Nicole. Thank you, Nicole, for that. Sherry, do you want to try talking about your ones?
I don't really have my stock portfolio with me because I'm not home.
Sure.
But I've been investing for quite a while now. I'm a lot older than many of your students. I have a very healthy stock portfolio. The only stocks that I have that I don't have that I want would be the three that I listed: the TD, the CP Rail, and the Enbridge. So that's about it.
Oh, that's great. Yeah. Your stock, like the stock selection, it aligns with a lot of what I buy.
Mhm.
Like my ones, like I own right now CN Rail, CP Rail, Microsoft, BMO, TD, and RBC, because railroads they'll never go away. They'll always
No,
be
they won't.
around.
Yeah.
Yeah, they'll always be around forever. And then banks are very good in terms of their cash generation and dividends. And then Microsoft has an amazing CEO, Satya Nadella, and he has an amazing vision for the company. And
do you know when Microsoft plans to take over Activision?
That's a good question. I'll check. I know that they've been trying to do it. Like they've been trying to do it for a while. And the problem, like what we talk about in class with antitrust, the U.S. government, they're against these types of mergers because they may hurt competition. So that's a big problem with it. It hasn't been approved yet, but the anticipation is if it's going to be approved, it'll be approved mid 2023. So we'll know by next year if it's approved.
Oh, okay, thank you.
Yeah, no problem. So yeah, great analysis, everybody. I'll ask some people that I didn't list yet, see if they want to talk about stocks that they may be interested in. Check this sheet too. So Zara, do you have any stocks that you want to talk about? Oh, that's okay, Zara. Yeah, if you think of stocks by the end of the class, just feel free. It's no problem. Yeah, any stocks that you think of by the end of class, let me know. And also, any of these stocks that are listed on this list, you could buy in your How the Market Works portfolio. So just for the 5% bonus assignment. So let's say I'll show, so this is my portfolio so far. I am up, let's see, let's see how my portfolio is doing. So here, graph my portfolio. So let's check my rankings. Oh, no rankings available. Let's I think we'll start our own contest. I'll create it here. So micro challenge. Let's say it ends December 29th. Next challenge, 4-hour class. So I'll just call it Microeconomics challenge. Next, then next, create. So let's make this challenge also. So maybe use limit orders here. So what I'll do is I'll put this link into our class, and then you can join, and it'll be like a class competition, and also do it across. I'll do it across every class in. Yeah, I'll do it across multiple classes, so you can compete with your other students in other classes. So I'll put this up. Put this up. So it's right here. So I put it right here. So that's up. So let's get started on our next thing. So great job, everyone. That was excellent. So let's just get started. It's more of an introduction to all this stuff here. So it's more of an introduction here, and then we'll go deeper into it. Which game do you want to try here? Like, which game do you want to try? Gold Quest, Let's Brawl. So Waseed and Sherry, Gold Quest, well, Let's Brawl. Yeah, maybe we'll do both. Like, just let's try both. Let's maybe do 3 minutes of both, let's say. Let's try 3 minutes both. So click. So yeah, we'll do 3 minutes both. So Kadja, who just came in, the link is in the chat for the. Great job, Wasi, Justin, Sherry, Christopher, Ellen, Kadja, Ma, Nicole, Sherry. Oh yeah, Sherry. I said Sherry already. Great job, Sherry. Yan, Feng, and Zara. Excellent job, everybody. So we'll do the next thing. Just bring it up here. So we'll do we'll do the other one. So host. So this time we'll do Monster Brawl for, yeah. So we'll do we'll do 4 minutes. So to join, click on this link here. We'll get started. So we'll get started. Awesome work, Waseed. Awesome work, Yanfeng. Awesome work, Christopher. Awesome work, everybody. Great work, Ellen, Justin, Kaja, Ma, Nicole, Sherry, Yanfeng, and Zara. And yeah, great work, everybody. Awesome work, everyone. I hope I didn't miss anyone. But great work, everybody. That was awesome. So we'll get started on our material today, but yeah, great game, everyone. So the test 2 is next week. It will be on chapter 8 and 9. So don't worry about that game. It's more for how the market works. I want you to learn a bit about the stock market. So that won't be tested on. That's more for the stock trading assignment. So let's get started. So we'll go through oligopoly today. So oligopoly is a few large producers. They're concentrated market power. They're focused on homogeneous or differentiated products. They have control over price, and they have entry barriers and mergers. So they need to have at least 40% or more of the industry to be an oligopoly. So can you think of any industry that's like that, where 4 largest firms own 40% of the industry?
Would Samsung or Apple be considered an oligopoly, or will they fall under monopoly instead?
So yeah, they would be. So Apple, that's a good example. So Apple, Samsung, Google, they would be an oligopoly. In phones, potentially. Like I would say it is a hybrid between oligopoly and monopolistic competition. It depends on how many companies are getting market share. If Apple, Samsung, and Google own like 90%, own like 40% plus of the market, it is likely an oligopoly. However, if they own less than 40%, it is probably monopolistic competition. Yeah, that's a good example, Nicole. So yeah, Disney, Sony, Warner is an oligopoly for sure. So Disney, they purchased Fox, and I believe they purchased Time Warner as well. So they have a lot of market power. Yeah, so that's a good example, Nicole. So Disney was able to purchase a lot of those companies. So Disney, Time Warner, Fox. So they bought 21st Century Fox, and yeah, so Disney purchased 21st Century Fox, and
Sorry, Professor, I can't see your screen.
oh, thank you, Sherry. So this article goes through what they own now. I'm just gonna wait. Here it is. So this is what they own now. So Disney, they bought 21st Century Fox, so they own all the TV and movie operations of Fox, and they own Marvel. They own they also own Lucasfilms. So they own a lot. Like Disney owns a lot of these companies, and they own a lot of these companies. It makes it very anti-competitive in the industry that they have so much market power in through buying Fox and other companies. So Nicole was right in terms of bringing that up, that that industry where like the industry where Sony, Time Warner, Disney, it's an oligopoly. So that's why, like, that is why Disney is such a good investment, because they have so much market power. So we can use this to our advantage. If a company has so much market power, e.g. Disney, they are a good investment because they are able to be highly profitable with high market power. So can you think of any companies with high market power that are around? Like, I'll ask Christopher, can you think of any companies that have high market power that you hear of?
Maybe Intel.
Yeah, that's a good example. Yeah, Intel would have high market power on, like, so Intel would have high market power on graphics chips. So they may be a good investment. So like any company with a lot of market power is likely a good investment. I'll ask Ellen. Ellen, can you think of any company with very high market power that would be a good investment? Yeah, Amazon. Yeah, that's a perfect example. Amazon would be a good example because they effectively own most of the e-commerce market and have tremendous market power. That's a great example, Ellen. Thanks, Ellen. And then Justin, can you think of a company that has a lot of market power that would be a good investment? Yeah, Netflix would be a good one. Yeah, that's a good one. Like it still is a good example. However, Disney Plus, Amazon Prime, Paramount, and others are providing more competition. So as we are going, they are becoming more of a monopolistically competitive market where they differentiate in terms of pricing and TV/movie quality. So that's a big thing that they do there, but they still have a lot of market power. So Justin's right, they still have a lot of market power though. Apple, yeah, Apple would have a lot of market power. Apple, so Apple has a lot of market power in the cell phone industry. Ma, yeah, Unilever is a good one. Yeah, Unilever has a lot of market power. That's a great example. Ma, thank you for that. Unilever has a lot of market power in consumer products. That's great, Ma. That's excellent. Any of these companies would be good investments based on the market power they have. So like Apple, you could probably purchase these and how the market works, and they'll be very good investments. So any of these companies would be good investments long run. Disney, it's like any of these companies, Disney, Amazon, Apple, Intel, Netflix. I just worry with Netflix, the rise of competitors like Disney Plus, Amazon Prime, Paramount. All those pose a big risk to Netflix, but it still can be a good investment. Just be careful. Yeah, just have own other stocks just in case there's an issue with that. Nicole, can you think of any companies that would have a lot of market power that would be a good investment?
Spotify used to have the biggest market share, right, for music streaming. But now I know that it has around 30%, but of the market. So I'm not sure if it would be the case for Spotify, but I was thinking about it right now.
Oh, that's a good example, Nicole. That's great. Yeah, the Spotify music and podcasting, they have a lot of market power in that industry. That's a great example, Nicole. Bitcoin, that's true. Because Bitcoin is the dominant cryptocurrency. And has most of the market share. So that's a good example. But you have to worry a lot about the issues with the up and down of that. But that's a good example. Sherry, do you have any? Can you think of a specific example about a company with a lot of market power?
I want to say Rogers, but I don't think so.
Oh, I agree. That's a good example. Rogers is a great example. So like Rogers is a great investment.
I have stock in Rogers, so I hope so.
Yeah, it's a great investment because they have a lot of market power. So like they only have TELUS and Bell competing with them in telecommunications basically because the government protects all three. So that makes it a good investment because the government's going to protect their market power. So that's a good example, Sherry. Thank you for that. And then Wasi, can you think of a specific a highly market power company that would be a good investment?
Thinking of highly powered markets, the only thing that comes to mind, well, the main thing that comes to mind is Microsoft, in my opinion, because they've been buying everything out and they have such a big hold on the industry as a whole.
Yeah, the good example, like Microsoft and software, like Windows, Microsoft Office, they have tremendous market power. That's a good example, Rosie. Thank you. Tremendous market power. That's great. So that's another good investment. So any of these would be good investments in your how the market works portfolio. Yanfeng, do you have any examples of companies with high market power? Oh yeah, Bell would be a good one. Yeah, Bell, Rogers, TELUS, great investments because they're protected. Their market power is protected by the government. Great example, Yanfeng. That's excellent. Thank you for that. And then Zara, do you have any examples of companies with high market power? Fido? Yeah, Fido, that's good. I think Fido's owned by Bell. And yeah, like Fido itself would have a lot of market power too. So like, yeah, Bell. It's either owned by Bell or Rogers. I forget which one, but yeah, that's a good example. Zara, thank you, everybody. Those are great examples, everyone. Rogers, okay, thank you, Christopher. Great examples, everybody. That was excellent. So, excellent job, everybody. So, the Herfindahl Index shows how much market power a company has, like how much market power an industry has. So here, tobacco products have the highest market power in this list, at a Herfindahl Index of 4775. And then second is brewery products, and then potato chip, pretzel, and popcorn are third. Motor vehicles are fourth. So these industries have very high market power, and you can, if you own stock in companies that in those industries, they're gonna do very well. So like tobacco products, like it's unethical, but like Marlboro. I'm not sure if they still do anymore, but they had high market power. And then brewery products like Anheuser-Busch and Coors, like Molson Coors, like they do very well. Also potato chip, pretzel, and popcorn, any company in that industry. So Lay's would do very well with that. Like Pepsi's in that industry, they own a lot of those companies. Motor vehicle, Ford, Tesla, GM. Yeah, so all those types of companies are good or have a lot of market power. So they use game theory a lot to show what happens in competition and how they set prices so they can be more competitive. And then they use the prisoner's dilemma to show a chart of who wins in the competitive game. So in this case, so if one person confesses and the other doesn't, the one person who confesses will get 1 year in prison instead of 2 years in prison if they did not confess. But this requires the other person to not confess. So they're going to confess because they assume that the other person won't confess. However, what happens is that both people end up confessing. So they'd end up here at they'd end up here at the end because they would both confess because they will get less time in prison if they confess and the other doesn't confess. They will risk the other not confessing in order, so they would risk the other not confessing. So they're going to do it regardless. They're going to confess because they're going to assume that the other person won't confess, even though they still will confess. So it's kind of irrational thinking, but this is how humans make choices. And this is kind of how these industries like Bell, Rogers, and TELUS compete on price. And also any industry out there, they compete on price through these types of strategies. So in this case, like an example of shoe market. So like two shoe companies, they have the strategy of pricing high or pricing low, and they can't talk to each other. So they would end up pricing low because they want to compete on price. So they would end up pricing low at the end because they compete on price. However, if they both price high, they both maximize their joint profits. So like in this case, they're not allowed to talk to each other. So if they were allowed to talk, they would both price high because they would collude.
Now you have to keep
and create a cartel. So like if they were allowed to talk, they would price high and they would collude and create a cartel. So they would end up being here because they'll maximize their joint profits of 24 instead of being at 16 joint profits. So they would coordinate and set both their prices high if they could talk and create a cartel. So this is what happens in oil. In the oil industry, this is what they do. They talk and then they set their prices high to maximize profits. So however, in this case, they weren't allowed to talk, so they both priced low. So yeah, how might oligopolists avoid the low profit outcome of The answer is that they might collude rather than establish prices competitively or independently. So they will set prices high through collusion. Yeah. However, they have the incentive to cheat because if they, so in this case, if the money, like the firm will cheat on the collusive agreement if the payoff of cheating on the collusive agreement is higher than being inclusive. So in this case, like they may make $12 through colluding each, but if one company could make $15 through cheating by going against the collusive agreement, they will. So like that's what they do. So that's what happens in these types of agreements at times. So this is what happens in collusion sometimes, where they might fix prices initially, keep prices high, and then what happens is one company might try to price low to make more money. So that does happen, and then there's a lot of price competition when they do cheat. But here, if they both set prices high, they will both share this profit share here. So like, let's say this is Bell, this is Rogers, and they both collude. So let's say they both collude. They both collude where they take half of each. So each of them take half of this profit, and they are maximizing profits because they set their price identical in order to set marginal revenue equal to marginal cost in order to maximize profits. So this is the cartel here, cartel / collusion. So like they're price fixing here. So they're maximizing profits here. So this will maximize their profits, but what usually happens is one company cheats. And then let's say Bell sets their price here, and then Rogers keeps their price up here. So Bell ends up taking a lot more of the profits. They might eat into Rogers' profit and take this slice, and that goes to Bell. So that might happen, but they're both better off if they keep the price high, identical high. They're both better off if they stay with the cartel agreement. So both Bell and Rogers in this case are better off if they stay in the cartel agreement because they will maximize profits, maximize joint profits for both companies. That's just what happens here. So overt collusion happens with oil companies. With OPEC, collusion is legal in Canada, but the most, so like OPEC is they collude, all these countries collude with each other to set prices of oil high. Collusion cannot happen in a lot of cases because of demand and cost differences, number of firms cheating, recession, new entrants, and legal obstacles. So they might collude because they'll make more money colluding instead of competing on price. If they compete on price, they're gonna make less money, so they'd rather collude. And so that's a big thing that they do. And then they also might advertise to gain customers. So it's low cost to get customers information, enhance the competition, and it speeds up technological progress and helps firms obtain economies of scale. Advertising can be manipulative, misleading, and people could buy a high price product that's advertised compared to a lower price product. So these companies here They've developed great brands through their high market share, the brand's world appeal across age groups and nationalities, loyalty of customers to the brand, and the ability of the brand to stretch to products beyond the original product. So as we talked about before, like companies like Apple, Google, Coca-Cola, Microsoft, General Electric, not General Electric, McDonald's, Amazon, those are all good companies to purchase. General Electric should be taken off this list because it's going bankrupt basically. It's not what it once was. And then IBM is not what it once was either. Toyota, I just don't know enough about Toyota. And Samsung, I don't know enough about either. Even though I have a Samsung phone, I don't know enough about the company. So like these 6 companies, Apple, Google, Coca-Cola, Microsoft, McDonald's, and Amazon, they're great investments. They have great brands, excellent brand recognition, excellent market power. So like you can't go wrong with any of those investments there. So oligopolies are inefficient because there's deadweight loss. And then here's more of the same here. So they would, if they both colluded and stayed national, they would, like, if they both colluded and stayed national, they would maximize joint profits at 17 plus 17, which is 34. So if they both colluded and stayed national, they would have made $34 total. But if they cheated, each of them, they would make less at 22 total. So 11 plus 11 equals 22. So if they went international, which is cheated in the agreement, each of them, they would make less at 22 total. So that would be not as great. So then credible threats are like if you cheat in the agreement, so you price lower, and there's like you'll make less in that case. And then repeated games are games that recur. So it's kind of like competition. Like they might price high at one point, then price low, then price high, then price low, then price high, then price low, and determine how much profits they'll make, and price high if it's a lot of profits if they price high, price low if it's a lot of profits if they price low, and go back and forth. So, and sequential games happen very similar to what I was talking about. And the Nash equilibrium is when it finishes. So when the Nash equilibrium is the last point they get to. So like they might price high, then they might price low, then they might price high at the end, and then that's where they finish, and that's where they stop basically. So Google, Facebook. Great game, everyone. Yeah, that was a interesting game. Yeah, we Christopher won. Great job, Christopher. Great job, Nicole. Great job, Receipt. Great job, Trisha. Great job, Yan Fang. Great job, Kia. Great job, Ellen. Great job, Sherry. Excellent work. Wow. Yeah, amazing scores there, everybody. Wow. That was great. That was great, everybody. So yeah, we'll start the next thing here. Yeah, that's a good game. I learned from one of the online, this like nice online educator at the school. She sent me this list of like new games that we can play. So chapter 14, we'll go through this. And technological advance is when there's new and better products, better ways in producing and distributing these products. Happens through the very long run. Short run, there's no change in technology, plant, and equipment. Long run, there's no change in technology. Very long run, technology changes with R&D. So it takes until the very long run to see any change. Invention is the new product or process, and it's based on scientific knowledge. There's patent protection, so no one else can make it. You could potentially make a monopoly where you have a lot of patents and no one else can make the product. So like, that's why pharmaceuticals work for that. So like Pfizer. So Pfizer, Moderna, pharmaceuticals, they are an oligopoly because they are protected by patent protection, by patents. Therefore, they will never be competitive because other companies will not be able to make the same products due to patents. So like it could be Pfizer, it could be Moderna, it could be Merck, it could be Johnson & J&J, could be AstraZeneca, all these companies. Innovation, product innovation, process innovation cannot be patented. So innovation, like, you know, if you're going to innovate in a process and you can't, like if it's a process like McDonald's Big Mac, you can't patent a Big Mac. So they use what they call a trade secret to keep it secret so no one copies it. Because you can't patent a Big Mac, so they have to keep it secret so no one copies it. And then diffusion is spread of innovation through imitation or copying. Firms embed new innovation, crucial capitalism. However, there's a lot of R&D that you need to do. So Korea is the highest, have the highest share of R&D expenditures as a percentage of GDP. Israel is second, Sweden is third, Japan is fourth. So it's beneficial to have a high share of R&D expenditures as a percentage of GDP. We should have it higher here in Canada. It's very well behind Korea. Korea is over 4%. Canada is just under 2%. So we should have it, it should be double, I'd say. Like we need to spend more on research and development because that'll grow our economy. In Korea, they produce a lot of great innovations in Korea in terms of mobile technology and other types of technology. So we could benefit a lot if we had better R&D spending. So yeah, capitalism, R&D is good for our economic growth and profitability. Entrepreneurs are initiators, innovators, and risk bearers. Entrepreneurial ability combines land, labor, and capital in new and unique ways to produce new goods and services. So we need to form startups, innovate among existing firms to do this. And we need to anticipate the future and exploit university and government scientific research. So startups, if you create a startup, you have you have ownership of the stock. Therefore, you benefit 100% from the innovations in terms of stock return. However, if you innovate within existing firms, you only get salary. Like you don't have stock ownership. So your benefit is limited to your salary. So like that's the difference. It's better to form a startup and create a new innovation or invention instead of inventing within existing firms. So yeah, it's important, like start creating your own business and doing innovation there. You'll get all the benefit instead of getting just salary if you're at an existing firm. And then exploiting university and government scientific research. That's another thing. Blackberry Town is a book written by Chuck Howitt, and he's going to be in on Wednesday, November 30th at 1:30 p.m. in my lecture, and you're all invited if you're free during that time. That's the lecture on the Wednesday at 1:30 p.m. He will speak on BlackBerry and the mobile phone market. He wrote BlackBerry Town, an amazing book on the phone market, and he went through how University of Waterloo provided professors with the rights to financially benefit from their research. So if the professor created something at the university, they will have rights to it in terms of profiting. So that was different. This is radically different from other universities, because most universities would own the rights to your invention. So this provided an incentive for the inventor to create amazing things, and that's one of the reasons why University of Waterloo has done great things there. So that's a big reason why it's been a good university there. And then research and development, you want to figure out the right amount. So marginal benefit equals marginal cost. That's the most efficient amount. So like if MB equals MC, then that is the efficient level of research and development. So we want to make sure that it meets that. So in this case, we want to ensure, so I'll bring that back. So in this case, we want to ensure that the expected rate of return equals interest rate cost of funds. So that will be the efficient point. So can you think of where that point happens in this chart? So I'll get somebody to volunteer. When does that happen in the chart? When does the interest rate cost of funds equal the expected rate of return? Yes, good job, Christopher. Yeah, 60 million is the efficient level because the interest rate of cost of funds will equal the expected rate of return here. So the efficient level of R&D is $60 million. So you could do that, like you can figure out where the most efficient point is by just analyzing the chart. That's great, Christopher. So yeah, you wanna ensure that it's at that point. And then you want to ensure that R&D expenditures are when MB equals MC. And there's a lot of risk to R&D because a lot of these technologies don't work out. And then you got to adjust R&D expenditures when expected rate of returns on various projects change. So you want to ensure that like we're always at MB equals MC. So the problem with R&D is there's a lot of imitation. So a lot of people can make the same product and violate your patent. And then it's important to be first. If you're first at something, you're going to get a lot more market share and have more protection in your industry. So being first at making a technology is really key to being successful. So if you're first in something, you're going to have a big first mover advantage there. So like, for example, YouTube, the YouTubers that were creating their channels around 2004 to 2007, that's when YouTube started. When like if they created their YouTube channel around there, they would have a massive competitive advantage because they have the first mover advantage. Now, if you create a YouTube channel, it's hard. You can still build it very well. Like if you have good content, like following a lot of Mr. Beast stuff is very beneficial in terms of being successful on YouTube. So you can become very successful now. Just try to follow a lot of what Mr. Beast does. But it was a lot easier when it was like the beginning of YouTube, 2004 to 2007. So the first mover advantage is very beneficial, but you can still be very successful. Mr. Beast showed that because he came in the game way later than 2004 to 2007. So if you want to be successful on YouTube, follow Mr. Beast's strategies. Yeah, he became successful on YouTube, and he lays out a lot of how he became successful, and a lot of it's available on YouTube. He outlines a lot of the ways, a lot of the strategies in terms of thumbnails, content, and how to make your channel into a big behemoth. So I highly recommend if you do want to become a YouTuber, listen to his work, because he really he's the expert in terms of building a channel to become like biggest in the world. So yeah, anyone who wants to be a YouTuber, you can talk to me and then I'll send you a lot of his stuff, and it's or just type in Mr. Beast strategies of success, and he shares a lot of it on YouTube. So pure competition, monopolistic competition, they're the best suited in terms of innovation, because you're competing with a lot of other companies. So you got to be better. Like in pure competition and monopolistic competition, you have to have better products. Like monopolistic competition is probably the best place. This is probably the best place to invest in research and development, because the reason why is because they compete on quality, because they compete on product quality. Better products get more customers. However, pure competition, the products are identical. Products are identical in pure competition. Therefore, R&D is pointless, because products are identical and unchanging. So that's pure competition. That's the case there. And then oligopoly and pure monopoly, there's not a lot of innovation in those, because they don't have to worry about a lot of competitors. So they don't really have to they don't really have to spend money on research and development or innovation, because they don't have a lot of competitors. So they don't really have to worry about making better products. So that's a big thing there. So monopolistic competition really is suited for innovation. So yeah, Canada, we're spending way less than we should on research and development here. We spent only 34 billion on research and development, and we need to allocate more resources on research and development, because that'll benefit our economy. However, we need to do a benefit analysis, figure out where what the highest research and development spending is to make marginal benefit equal marginal cost. So that's very important there for our future. We got to make sure that we have that. I'm just gonna bring up the next activity here. We'll start this here. So what's a tangible item you can purchase? So goods. Okay. Yeah, Ma, thank you. You were right. That's great. Great job. Great job, Ma. And then what's a person or business who creates or something or performs a service in exchange for a purchase or trade?
A producer?
Yes, good job. Perfect. Great work. And then what is something a person or a business does for you? Service. Excellent job. That's great. Great job. Thank you. Great job. Great job, Mao. That was excellent. So that